Welcome to my channel. Okay, today I want to look at the topic trial balance. In my previous video, we talked about double entry, the principle of double entry, the simple way of how to debit and credit every transaction, or a simple way of how to make entry in the ledger. And remember, also in one of my previous videos, we talked about accounting processes. We may mention that accounting processes start from source document to journal, and from journal to ledger, and from ledger to trial balance, and finally to financial statements. So we may mention that accounting processes begin from source document to journal, from journal to ledger, and from ledger to trial balance. So now, what the meaning of trial balance? Let's try explain briefly what the concept means to help buttress our understanding. So trial balance is a list of balances extracted from the ledger, including cash and bank balances extracted from the ledger, with an intention to checkmate the arithmetical accuracy of the entries in the ledger. Look at the ledger here. The trial balance is a list of balances extracted from the ledger account in order to test the arithmetical accuracy of the entries in the ledger. A trial balance is not an account, but rather a mere statement. Therefore, a trial balance is not a conclusive proof that there is no error in the account. It's just a proof that the record from source documents to ledger in terms of debit and credit are actually accurate. Of course, there are some errors that cannot be reviewed by the trial balance, even though that the trial balance. So what I'm trying to say is that trial balance is just a list of balances extracted from ledger, both cash and debit, both cash and bank balances, in order to check the arithmetical accuracy of the entries in the ledger account. So the main purpose of preparing trial balance is one, to check the arithmetical accuracy of the entries in the ledger. Two is to help facilitate the preparation of financial statements. Of course, if the trial balance are not prepared, it's very difficult to prepare financial statements. And so trial balance are usually prepared in a system where double entry bookkeeping are maintained. That's why we talk about ledger. In the ledger, we have credit and debit balances. So the main double entry was what followed. So ledger is actually trying to show that double entry was actually followed correctly. So now, let's try the meaning of trial balance. So the trial balance is the list of balances both cash and bank balances. So trial balance is a list of balances extracted from the ledger, both cash and bank balances, to check the arithmetical accuracy of the entries in the ledger. So now let's take a work example to help us enhance our understanding. But before taking a work example to help enhance our understanding, you have to know or remember the previous, or can you refer to the previous video to know the principle of double entry system. That it also applies to trial balance. That every assets, expenses, and receivable always have a debit balance, while every capital provisions, liabilities and payables, always have a credit balance. So always have that at the back of your mind. So now, assuming we have the following transaction. The question said Mr. Paul started business as a retailer on 1st January 2023 with an initial capital of 500,000 naira. The following is a summary of his business transaction for the first 6 months. Then number one of the transaction says delivery van was bought at a cash of 240,000 naira cash. Number two, cash sales total 600,000 naira. Cash sales total 600,000 naira. Number three said rent of 180,000 naira was paid on commencement of the business. Number four said during the period, Mr. Paul withdrew goods worth 60,000 naira and cash of 70,000 naira from the business for his personal use. Number five, credit sales amount to 400,000 naira and 120,000 naira out of this amount was outstanding as at 30th June 2023. Number six, an amount of 850,000 naira was paid for general expenses. Finally, number seven said during the period, suppliers will pay 450,000 naira for goods and invoice totaling 80,000 naira remain unpaid as at 30th June 2023. Required write up ledger account and extract the trial balance. Ladies and gentlemen, this is how to prepare ledger account and extract trial balance. Very simply. First of all, what you need to ask yourself in every transaction is what are the two accounts involved. Starting from the first statement, Mr. Paul started business with initial capital of 500,000 naira. What are the two accounts involved? We have the capital and then the cash account. So we have to open the two ledgers. You have the cash account and then the capital account. Capital account. And then when cash is increasing, you debit, and when capital always have a credit balance. So you debit the cash account in the name of capital. Remember debit, that is credit, put your naira sign, and the amount is 500,000 naira. So when I come over to capital account, I will now credit it in the name of cash. Debit, put your credit, put your naira sign. Now say cash 500,000 naira. This is for the first transaction. Then this one says delivery van was bought at a cost of 240,000 naira cash. Then here, what are the two accounts involved? We also have cash and delivery van. Both of them are an asset. But while delivery van is increasing, this one is increasing, cash is decreasing. So we have to credit cash and then debit delivery van account. So we have to open delivery van account. We have to open delivery van account. Open delivery van account. Of course, an asset always have a debit balance. So we now say cash. The amount is 240,000 naira. And then when you come over to cash account, because it's already debited here, you come and credit it here. You now say delivery van 240,000. That is for that. Then the next transaction says cash sale total 600,000 naira. What are the double entry for cash sales? For cash sales, debit the cash account and then credit the sales account. So you already have the cash account. So come here and debit cash account in the name of sale. Amount is 600,000. So we open the sales account. Now the sales account. Cash. How much down? Cash sales 600,000 naira. And then when we come over to cash account, we debit cash in the name of sale. Okay, we have already debited it. Then we come over to the next transaction, the number 3. Number 3 said rent of 180,000 was paid on commencement of the business. What are the two accounts involved? We have the rent account and then also the cash account. So what will we do? Cash, use the cash and pay for the rent. So cash is decreasing. When an asset is decreasing, you credit. And then rent is an expense account. So when an expense is increasing, you debit. You open a rent account. Open a rent account. In the name of rent, you put cash. How much is the money? 180,000 naira. When you come over to cash account, you put rent 180,000 naira. That is all for this transaction. Then number 4 says during the period, Mr. Paul withdrew goods worth 600,000 naira, worth 60,000, and cash of 70,000 from the business for personal use. This is drawing. And you remember in our previous video, drawing always have a debit balance. So what we do, we open a drawing account. We open drawing account. Drawing account. Debit, credit, cash. The proprietor withdraw both cash and goods, and so the value of the goods he withdraw was 60,000. So under the goods, we will record it in the name of purchases. 60,000. And under cash, we also write cash. How much? 70,000. The corresponding entry for cash, we go to register of cash account and drawing 70,000 naira. And then the corresponding entry for purchases, we will have to open purchases account. So we say purchases because it's debited here, we have to credit here in the name of drawing. $60,000 naira. Then this is how to pass an entry, the double entry for it in the ledger. So the next transaction said number 5 says credit sale amounted to 400,000 naira and 120 out of this amount was outstanding as at 30th June 2023. Credit sale amounted to 400,000 and 120 out of this amount was outstanding as at June 2023. What are the two accounts involved? We have the debtors account and cash account. So under we have to open debtors account. Since the question said a credit sale amounts to 400,000 and 120 out of this amount was outstanding, it means that out of the credit sale of 400,000 naira, that they have paid 280,000, and then the balance, which is 120. If you use calculator, it will subtract 400,000 minus 120, give us 280,000. It means debtors account. Debtor is an asset, we always have a debit balance. So we say okay. So the next transaction which we have is this number 5. Say credit sale amounted to 400,000 naira and 150,000 naira out of this amount was outstanding at the 30th June. It means that out of this credit sale of 400,000 naira, that we have already received 280,000, because if you subtract 120,000 from 400,000 naira, you have 280,000. It means we have already received 280,000, whereas this 120 is outstanding. So the two accounts involved here is the sales account and then the debtors account. So if you look over here on the board, see this is debtors account, and the debtors account always have a debit balance. So we debit it in the name of sales account, so that the corresponding entry will go to the sales account. So the total money is 400,000 naira, but we have already received cash of 280,000 naira. 280,000 naira. So the balance carried that amount is 120,000 naira, which is left outstanding. And then the corresponding entry of this sales will now record it under the sales account as debtor 400,000 naira cash. Then the next transaction says number 6, an amount of 850,000 naira was paid for general expenses. The two accounts involved here is the general expenses account and the cash account. So we open the general expense, we already have the cash account, we open the general expenses account. This general expenses account, when expenses is increasing, it always has a debit balance. But when cash is decreasing, we credit it. So we debit the general expenses account in the name of cash account, so that the corresponding entry goes to the cash account, and because it's debited there, it will be credited here as general expenses 850,000. That's for that. The next transaction, which is the last transaction, says during the period, suppliers were paid 450,000 for goods, and invoices totaling 80,000 remain unpaid. It means that the total of the amount of money that we are owing, that the business is owing to the creditor, is the addition of 400,000 naira and the 80,000 naira that remain unpaid, which if you add it, you get 530,000 naira. So the two accounts involved here is the debtors, the suppliers account, which is the creditors account, and the purchases account. So come over to this place. We already have purchases account. Come over to this place. Open the creditors account. And creditors account is a liability account and always have a credit balance. So we credit it in the name of purchases, 530,000, so that the corresponding entry goes to the purchases account, name of creditor, 530,000. Then the question says that the business have already paid 450,000 naira to the creditor. So we now say cash, we paid with cash, 450,000 naira, debit it, and the our balance carry down will now be 80,000 naira. So, and remember, the corresponding entry for this cash will go to the cash here, supposed to go to the cash account. So you come over to the cash account and then you debit it because you have already credited it here. Then now we are going to extract the trial balance. Okay, let's balance the account so as to go and extract the trial balance. Okay, now so need the trial balance now. Let's now extract the balances from this ledger account into our trial balance. First of all, let's fill the credit side. Let's start with capital. So now say capital account. Capital account. The balance brought down is 500,000 because the side that an account has its balance brought down is the side of the account that it has its balance. So now capital always have a credit balance, and it has its balance brought down at credit side, showing that it has a credit balance. So the amount is 500,000. 500,000. Let's check for another transaction that may likely have a credit balance. We have sales account. Sales account always have a credit balance. So each balance brought down is supposed to come at the credit side. If you check the transaction, you can see that the balance brought down falls under the credit side, showing that it has a credit entry, and the figure is 1 million. This is 1 million. 1 million. So we now say sales account 1 million. What another transaction that's supposed to have credit entry? Rent no, purchases no. Okay. Creditors account. Creditors account, you can see creditors account is a liability account, and so it's supposed to have a credit balance. So you can see that the balance brought down fall under credit side. So and the balance is 530,000. So we now say creditors 530,000. Then cash account. Cash account, it has its balance brought down at the debit side. Of course, cash is an asset account, always has the debit entry, and the amount is 355,000. So now say cash account 35,000. The next ledger account is drawing, and it has its balance brought down at debit side 130,000. It means it's going to be debited in trial balance. So we say drawing 130,000. The next account is purchases, and if balance brought down is also on the debit side, it means it will also go at the debit side of the trial balance. We say purchases, how much? 470,000. The next transaction is delivery van, and delivery van is an asset account supposed to have a debit balance, and so you can see it here, the debit balance 240,000. So delivery van, how much? 240. 340,000. The next account, you have rent account, rent and expense account, and it's supposed to have a debit balance. And you can see it has a balance brought down 80,000 at the credit side. It's supposed to be 80,000. So 80,000. So we now debit it at trial balance rent 80,000. No, rent is an expenses account and supposed to have a debit balance. So rent become, yes, it's an expense account, is correct. Have a debit balance. The next transaction now is you have we have the debtors account and the balance brought down for 400,000 debtors. $400,000. The next transaction is general expenses. General expenses also have the balance brought down at the debit side. Balance brought down 85,000. General expenses. $85,000. The next transaction now is we have already treated creditors account. So I think we're not going to total it. Let's see. Okay, you can see that if you add 500,000 to 1 million to 80,000 naira, you're going to get 1,580,000 naira. And if you total the debit side, you will also get the same figure. It shows that the entries as it pertains to debit and credit in the ledger are actually correct. So this is how to prepare ledger account and extract trial balance. In our next video, we will talk about the error that can affect trial balance and the one that cannot affect trial balance total. Of course, you know that the total now shows for the fact that the total now has an equal balance is not a criteria that there is no error here, but it only shows that the double entry system has been followed meticulously. So this is how to prepare ledger account and extract trial balance. Please, if you like this video, please share, subscribe, and bye for now until we meet